Okay, champs, welcome back to Libertas Trading and welcome to the event preview for Swiss CPI on Wednesday, the 3rd of December 2025. So, what are we looking at trading today? It's the same as last month for me. I'm not looking at trading a hawkish outcome. Basically, if we just look at the Swiss National Bank's inflation forecast quickly, we can see that they're basically forecasting for Q4 an average yearly inflation of 0.4%. If we look at Swiss inflation over the last sort of 24 months, we can see that we've been within their 0 to 2% target band for basically over 2 years now. Apart from that little drop off we had, I think that was in May, we've basically been within the target band. So let's say we have a massive beat tomorrow, we print at 0.3%, which is above the max. It's 0.2 above consensus. They're the numbers I'd usually look for Swiss inflation, 0.2% deviations from consensus. If we do print at 0.3, if we do print at 0.4, we're still within the target band. We're basically in line with their expectations. And, we haven't really moved anywhere in the last sort of, 4 or 5 months. So for me, I won't be looking at trading a beat unless we get something absolutely massive, which is pretty improbable. So I'm personally only looking for a miss, and I'll be looking for, printing in the negative territory again, out of the target band. Of course, with Swiss inflation at the moment, where the Swiss franc's so strong, that's going to be pushing inflation down. That's going to cause deflation. So if we do get really negative prints, the Swiss National Bank don't want to cut anymore. They're already they don't want to go into negative rates. They're already at zero. So, interventions on the table, basically. They need to get the Swiss franc weaker. They could intervene in markets. That could lead to a massive weakening in the Swiss franc. So I just think a negative print is going to have a much bigger impact than a positive one. So based on that, what numbers are we looking at? So for the monthly number, for a dovish outcome, I'll be looking for minus 0.4% or lower, which would be the lowest since April 2020 and just below the minimum expectations. To be honest, if we get a minus 0.1% on the yearly, and this comes in at minus 0.3, I would look at trading, but in an ideal scenario, we want to see minus 0.4 here. And then for a hawkish outcome, I'm not going to trade a hawkish outcome, same as last month, but I would be looking at 0.1% or higher, which would be above the max and the first positive print since June. And then for the yearly print, the important print, I'm looking for a dovish outcome of minus 0.1% or lower, which is below the minimum, the first deflationary print since May, and in line with that May print would be the lowest since March of 2021, which is pretty big. And then for a hawkish outcome, I'd be looking at 0.4% or higher, which is above the max and the highest print since January. Basically, for Swiss inflation, I usually look at 0.2% away from consensus, which usually beats the min or the max. However, for a hawkish outcome, if I were to trade it today, I'd be looking at 0.3%. I just don't think it's much of an issue if we print at 0.3% because, we're still within the range, we're still within their target band, we're still within their inflation expectations. And it's going to cause no fears over intervention. So, I won't be trading a hawkish outcome, but yeah, if you do, fair play and good luck. So for medium term plays, for a dovish reaction, I'd look at Euro Swiss franc upside, which I believe is the purest Swiss franc inflation play. The pair has been pretty range bound the last 12 months, and low enough inflation could spark intervention fears. I wouldn't be surprised to see Euro Swiss franc back up at the 94.50 channel resistance soon enough. So we'll quickly check out the Euro franc chart. So here's Euro franc on the daily. As you can see, it's been very, very range bound. We've bounced up again from that 92 level, which would have been an amazing long. I did actually get into these longs, but I bottled it early doors. Should have hold on. And yeah, could see price move back up to that 94.50 level in a week or two. Wouldn't be surprised to see that, especially on a weak enough print. And then for a hawkish reaction, no prizes for guessing which currency I'd like to sell. I'd look at pound Swiss franc downside, a real momentum play with a nice bounce down from solid resistance. The pound should continue to sell off as the budget pop higher ran out of steam very quickly, and we go back to business as usual for the UK, which is bad business. Let's quickly look at the pound franc chart. So you can see here it's a big momentum play. We're solidly moving down lower. We have retraced back up to this sort of 107 level where we found some solid resistance, and then we're starting to push lower again. So maybe targeting 1050 or something could be a nice level, but yeah, I'd look at some further downside in this pair. Now for short-term plays, so Swiss inflation can be very tricky to trade due to the huge pullbacks we tend to see. There's no one-size-fits-all approach that will work every time. But in my experience, it's best to wait at least 10 seconds before entering, and ideally when you start to see price trade in the right direction. So last month I waited 90 seconds before entering, which is quite a long time on a data print. As it looked like the retracement had bottomed out, I got very lucky there. It can also take price a while to play out. So the 30-minute mark can be a good time to take partial profits or profits off the table. So again, these are just estimates. If we get like a 30 pip spike higher in dollar franc, I'm not going to be aiming for 10 pips. But based on previous reactions, these are the levels I'd be looking for. I'd be looking for 10 pip target on the dollar franc, and then a 10 pip target on the euro franc. However, I would be looking at holding this one, for at least half an hour if the numbers are good enough, if the miss is good enough. I think if we print negative again, we could see the Swiss franc sell off pretty hard. So I'll be looking at holding that for a bit longer. So I actually won't be using a short-term play, more of a medium-term play. Well, medium-term for me is a few hours, so that's what I'd be looking at. Just want to quickly show you the last 3 reactions we've had out of the Swiss data, because I think it's worth looking at, just so you can see how the price has reacted in the short term. So this was last month's print. We had a solid miss. Again, I always look for 0.2% deviations in the Swiss franc. We got that. We printed a lot lower at 0.1%, which was a great miss. I held off on this trade because we got a massive spike higher here. I think we spiked about 13 pips. As I said, I waited 90 seconds. I'm not giving it the big one. I actually got out around about here at break even for price to just move higher. Literally as soon as I exited my trade, price ran higher, so definitely not giving it the big one. But last month I did wait around 90 seconds, so massive spike higher. We had a bit of a retracement, and then when I started to see price sort of bottom out, we had sort of 30 seconds where price didn't move much. That's when I got into longs on the euro franc. And then back in July, this again is the 5-second chart on the euro franc. So this is the June data. Again, we had that 0.2% deviation from consensus. We spiked lower. We almost completely retraced. So that was about 30 seconds. And then we sort of continued lower. I mean, this wasn't an amazing move on this one, which is why I'm, sticking away from the beat, or one of the reasons I'm staying away from a beat. But again, we can just see how far price retraced on this one. And then head into the May numbers. Again, we got those 0.2% deviations. And then look at that, we spiked higher. You're probably getting filled at sort of like 93.62, 93.63. And then we pulled all the way back, and then we pushed higher again. So, it really is worth waiting on this one. Of course, not every time. There'll be some times where inflation comes in soft or hot and the price just takes off. But in my experience, it's always best to wait. If we do get a time where inflation just takes off, I'd be tempted to sit that one out, just where we see such violent retracements. So yeah, I'd be waiting at least 10 seconds, maybe 30, 40. I like to see price retrace and then start moving higher again. So even if I get in sort of around these levels, at least I know we've pulled back and then started to move higher. That's just the way I play it anyway. Anyway, guys, that's it for the Swiss CPI. Just a short one today. Good luck, and any questions, give me a shout.